And joining us right now for a preview on what we can expect is Ian Shepherdson, Pantheon Macroeconomics chief economist. Ian, what do you think? To hear Jamie Dimon issue concerns about that, to maybe think that we have not completely beaten down this inflationary monster that we've been dealing with for a while, is he right?
Nope, he's not. It's gone. It's going. All the things that pushed inflation up are fading away. The massive shock to supply chains, the surge in wage growth, the surge in rents, all of these things have faded away. And they continue to fade away. And oil prices, oil is down to $67 a barrel. It's a huge disinflationary force. Disinflation is coming to us from China. It's coming to us from the domestic economy, from all fronts. So, no, I don't buy for a minute the idea that fiscal expansion is going to cause more inflation going forward. It certainly did going backwards, for sure. The excess stimulus in 21-22, I think, certainly did contribute to inflation. It boosted consumption way above trend, and that allowed retailers to raise margins substantially. But that's all in the past. We're not there anymore. So, no, I'm really not worried about the future. In fact, if you force me, I would probably say there's more risk of inflation next year going below the 2% target than staying above it.
Even with his point about the spending that has yet to be done, the CHIPS Act is really just getting rolled out, the Green New Deal, that money just getting rolled out, and a situation where even Democrats are saying, yeah, you need to spend more on military.
Yeah, the CHIPS Act and these various other infrastructure, other things, mostly have almost peaked now. So the incremental extra spending from those things isn't very big, and that's what matters. It's the change in policy, not the level. So yeah, spending's very high, the budget deficit's very high. It's going to stay very high for the foreseeable future, and military spending is going to be part of that, I'm sure. But it's the change is what really matters, and we don't have now a huge shift in fiscal policy looking forward. It's very small compared to the huge increases in the deficit we saw in 2020 and 21. So these things are very marginal when you sit them against the big domestic forces, which are very disinflationary, in particular the labor market. We had wage growth peaking in 21-22 at nearly 6%, and now it's heading back down to about 3%. And when you adjust for the very strong productivity growth that we've had, unit labor cost growth is close to 0. It's really extremely difficult to get sustained inflation above the target if unit labor costs aren't rising at all, because for most companies, most businesses, labor is by far the biggest variable cost. And then looking at other ones, oil. Not so long ago that people were talking about oil going over 100 and staying there, some really horrific, terrifying forecasts in the spring of surging oil prices, and look at where we are now. And that hasn't even begun to feed into headline or core inflation, but it will.
So what about this idea that the economy is slowing rapidly? If you don't think inflation is an issue, do you think that this rapid slowdown reflected in the oil markets and other places is a big problem?
Yeah, so I think Jamie Dimon was on firmer ground when he talked about the stag bit of that of the stagflation story. Though I'm not sure stagnation's in our near future. I'm not ruling it out. The weakening in payrolls, I think, has got some way left to run. And in real time, that's probably the best indicator we get. The GDP numbers tend to be subject to really big revisions. And the turning points, GDP tends to be printed high and then revised down, whereas payrolls aren't very reliable either, and they tend to be revised, but they tend to be revised less than the GDP numbers at turning points. And that weakening trend that we're seeing in some of the forward-looking hiring indicators as well, some of the business surveys are telling us that payroll growth gets weaker. So, yeah, I am nervous about growth. I think that we're in for a period of sluggish growth at best for the next year or so, maybe even longer than that. And that's why I want the Fed to get a move on. That's why I was so disappointed in June when they pulled back on their expectations of easing. They're going to have to put those easings back into the forecast next week.